Welcome to the Foundry, where leaders are forged daily. I'm your host, George Roberts. Welcome back, entrepreneurs. Today we have Vish Muni, founder of PGL Properties. Welcome, Vish.
Thank you. Thank you, George, for having me on your podcast. It's always great to meet with like-minded entrepreneurs, and with someone like you, it is really great because you have a lot more qualification than most of people in the real estate industry. It'll be great to be on your podcast.
That's awesome because you are also somebody with additional qualifications. So I understand you came from IT. Why don't you tell us about your start in IT and how you merged that into entrepreneurship?
Yes, thank you, George. Yeah, I started my career with IT, being a COBOL programmer. I know a lot of people may or may not have heard about it, but COBOL was a big thing when it was Y2K, that is year 2000. So I was a programmer at that time. And being programmer all along was not very exciting for me because I had to sit behind a computer and program. And then that's when I realized I'm more of a people person. I like to step out and meet people. And I got into business development and sales and got into customer support. And finally, I decided that all these things are good, but I need something more. And I was a person who sort of need more challenges constantly on an ongoing basis. And that is what pushed me to be an entrepreneur. And real estate I'm a second generation real estate investor because my grandparents, my parents, everybody is into real estate back in India. So real estate was always in the family, and it's just that I had to decide when to move in and how to take it from there. And that is how me and my wife got started back in 2009. And we founded a company called Duplexaholics. It's all one word. And I don't want anyone to laugh. It's called Duplexaholics. And with the objective that we buy one duplex for 10 years, and that should be good enough to retire. And that is how we got into real estate, to be honest. And after 5 years, everything changed because I had to put my own money, and we maxed out all our credit cards, the business line of credit, and the creative financing and everything. And we were able to manage that for 10 years. And then that is when I had to take a step back and see what I was doing wrong, because I was nowhere close to the passive income numbers what I had in mind. And I discovered something called syndication. I'm sure that's not new to a lot of people, but it was new to me. And the whole thing changed. That is how I got into multifamily syndication, George.
That's great. A lot of those single family investors, they really hit the wall soon. And what I love about multifamily, that economy of scale, the fact that you've got a team, and in many cases, you can even keep your day job, be an active investor in multifamily. Very hard to do that. Before you know it, those single family homes, they expand to take up your whole day.
Yeah, you're right, because I was there, and even though I was a hands-off investor, I didn't like managing my own properties, but I wanted to invest. I want to own everything, but I don't want to be a hands-on person like being a landlord. I want to have control over everything. So, and I had property managers for all my single-family homes and duplexes, even though they were all close by, but I didn't want to answer all the calls when it came to tenants, toilets, trash, all these things.
Yeah, that's awesome. And another thing I'd like to bring out of your story, one of my favorite investors, Mr. Personality, likes to point out how a lot of people who are great entrepreneurs really don't like the workaday world. So if you're out there and you're frustrated in that 9-to-5 job, maybe you are an entrepreneur at heart. Give it a shot. See what happens.
Yeah.
So then you say it was about 5 years ago that you started studying up on the syndication model. Why don't you tell us about that journey?
Well, 5 years back, me and my wife wanted to do something after we realized that single family rentals are good and the properties have been appreciating, and we love it because it's like anything. The excitement is in the journey. So there was a lot of learning which happened, and we want to scale up, and we did find some apartments complexes close by, nearby. So we did visit these apartments. When they told us the listing price was 1 million or 2 million, so we used to look at each other and get cold feet, come home and realize, where are we going to get this money from? So that really happened for almost 4 to 5 years. And I started researching a little more, and that is how I discovered this thing called syndication. I was reading a lot of books, and one of the books was written by our ex-president, Mr. Donald Trump, and there's another guy with Dave Lindahl. So these two have written a book on commercial real estate investing. And I read that book, and that is where my journey started. And I ended up signing up with Dave Lindahl's mentorship program. And once I did that, the reason why I wanted to sign up was this time I wanted to do it right from the day one, and I didn't want to spend another 10 years learning and making mistakes. And the 10 years for me is a lot of time. If you don't value time, time is money for me. And given my lifestyle, I want to regain my time back. That's something which is already gone. And that's why I had to jumpstart this program into multifamily apartment syndications. But believe me, that journey was the best thing which happened. And it's been 2 years since I got into multifamily apartment investing. It's been excellent. That's the best thing I would say it happened.
Great. And then maybe just to take a step back, define the syndication model and how that works.
So how did I come across the syndication model, and how did I get started? I love networking all the time. I like to meet people all the time. As much as I like to talk about syndication or talk to people, but you can call me old school or new school, it doesn't matter. But I love to, when I meet people, I want to meet the real person. So on computer, anyone can be anything, but in person, I tell people, I'm going to buy you a coffee, I'm going to buy you a beer, I'm going to buy you a lunch. You just get yourself there. So, but anyhow, long story short, so I was networking with a lot of groups, and I did come across people who have invested in 4 syndications, 5 syndications. And how this whole syndication model works is basically a group of people get together, 4 to 5 people. We go buy a property and get the debt secured, and then go meet investors, passive investors who want to invest in properties, but they're too busy or they don't know what it is. So they get a share of the property without any headaches, and they get all the benefits. To put it in simple terms, if you want to fly from let's say Austin to New York, you get on a plane. When you're buying a ticket to get on a plane, that is a limited partner who gets on a plane, who sits back, and the pilot, and the co-pilot, and the flight attendants, they're all the general partners. That is the managing team. Their job is only to make sure you get the excellent service, you get the best views, and you get to enjoy all the benefits as a passenger. That is a limited partner. So we are the syndication team, and that is how things work. And we buy the properties, we value add, manage the property for 3 to 5 years, and we turn around and sell it at the current market value after 5 years. And all this is happening while the limited partner is sitting back at home doing nothing, and all they put money in the deal is 50 to 100,000, and they get to enjoy the benefits. That is how the syndication model works. And this is great because it's a team effort. It's difficult for one person to analyze the deal, to build relations with the deal, build relationships with the partners, that is the lenders, with the brokers, and with the vendors. So it's a lot of moving parts there. So it's best is to have a team analyze the market. So there are too many things happening at any given point in time. So that way, it is the best thing is to have a team and delegate responsibilities, because not everyone would want to do everything.
So this is a great model, and I think a lot of people who do hit that wall with, not being able to move forward in single family, maybe they don't want to go the route of getting a portfolio loan at some local lender, which can be a real pain, right? That's very different than, say, buying your first 10 houses once you hit that wall. A lot of people discover syndication and they decide they like that. But there are other models, like what about joint ventures? Or I've heard people will go out and they'll get a single debt investor, single private investor to purchase essentially debt in the project to serve. Sorry, I'm saying that backwards. That they get a single person to essentially loan them the equity they need and then borrow the rest from a bank. So why syndication?
Well, that's a great question, George. Thanks for asking that. So why syndication? So given my experience in apartment syndication, so far I've invested in since 2019 of November. So it's going to be about 2 years now. I've invested in 7 different syndications, and every syndication is different. Why I like syndications to joint ventures is basically joint venture or a one partner is basically in this syndication, you are bringing in together of 5 different people. So let's say each one is taking 20% responsibility. One is to analyze the market, another one is to secure the debt, and the third one is to build relationships with the vendors, and the fourth one to manage and maintain the property, and the fifth one to do an investor relations. So each one of them have taken over 20% responsibility of this specific asset. But if you're doing a joint venture, I wouldn't say joint venture will not work. Joint venture works fantastic, but I've never done those model, so I can't speak too much about that. But for me, this model works. And so this way, each one of us are taking on 1/5 responsibility. It becomes a lot more easier, economies of scale, to take on bigger projects. So I'm not stuck with one project. If I was doing single family homes, in managing the property manager, it is a big challenge by itself, because the returns on that, I did not say I was not happy with it, because I wanted more all the time. I wanted more time. I wanted more money, which means I can I can get back more time. So that is my thing. So, but the different people have different things. But my thing is the syndication is the way for me.
Perfect. And with your love of networking, your love of people, being a people person, I can see that would be a natural fit. So then, as you went through your progression, now I think just in the last year, you mentioned you to me off camera that you've been up to like what, seven deals. So you've been a limited partner, general partner, raised capital, done various things.
Yes.
So how about just taking us through the timeline? So how did you start out? Were you starting out as a limited partner?
Well, I started out as a limited partner, and so with me being always networking, always willing to learn, and I was a little more liberal when I came to spending on education and networking, because I realized that whatever I spend in 1 year, will definitely be less than what I spent in 10 years. So given that, I was networking, probably attending something like 4 networking events at one time back in 2019. And so that is where I met a lot of syndicators, and one of them came out with this deal in Round Rock, Austin. And that is how I got started. I invested in his deal. And then I attended Brad Sumrock programs in Dallas. And I met a lot of syndicators out there, and I invested in 2 of their deals as a limited partners. And because of my networking and because of me being very friendly with them and talking to them, and telling them, and they realized what my potential is given my background. And they asked me several times that would I be interested to be a KP on their deals. And I wanted something more. I wanted a GP right straight away, not a KP. So that is how I was able to get onto people's deals, by showing what I can bring to the table. Because what I've realized is life and business is all about relationships, no matter what technology you have. If you don't connect with the people, if you're not being authentic, if you're not being real you, it's impossible. Nobody is going to give you any money. Nobody is going to invest with you, no matter how good that deal is, because people invest in me not because of the deal, because they know if they trust me, I'm going to stand by them no matter what, whether the deal is going south or if we're having challenges. So that is how I was able to get on to 4 different syndications as a general partner, because I still value all the people who invested in my deals. I still have very high respect for them, because they trust me more than the deal. And that will continue to stay. That is what I do. I love my friends, and I want to give back to them whatever way. And I really thank them for investing with me.
That's great. Tell us a little bit about your buying criteria.
Well, like as I told, it's a syndication thing. So we basically we work as a team, and since there's 4 different syndications, it is not just one team; it is 4 different teams, and so everyone buying criteria has been a little different. But what has been common among all the 4 is all the 4 syndications. The locations of all the 4 have been where the population has been more than 250,000 people, 250 to 1 million people. And the properties have been B and C class, not A class. And the minimum doors has been more than 50 doors, 50 to 300 doors. And B and C, why B and C is basically that is a value add opportunity is pretty high. And in all these properties, so that is what we've been looking at, and the employment has been great in all these locations, and the population has been growing pretty steadily, and the housing market has been growing also. So I spoke about the population, about the net per capita income has been growing, and then the house value has gone up, and the job markets has been pretty strong in all these areas. And finally, the crime rate has been consistent. I mean, even during the pandemic, all these locations where we invested, the jobs have been growing.
And are you using any of Neil Bauer's real focus criteria?
Well, we do use Neil Bauer's, and Neil Bauer's we use, and then we use RE Mentor as a template by itself, and Neil Bauer and Michael Blank. So between these 3, because these are 4 different syndication teams. It is not the same team. So everyone is used as their own team, but own tools, what they use, the underwriting tools, and how they select a market or select a property. So, but what's been consistent is everyone goes back to this research in terms of the population growth, the per capita income, and the housing market, and the job market, the employer mix, and the crime rate. So these top 5, no matter which where we buy the property, but these 5 are crucial to buying a property. These 5 are, I'd say, I could call it as a 5 principles. That is number 5 principles. Number 1 is all this. Number 2 is having a great team. I always look for the track record of the team. What kind of people are these? Whether can I trust them or don't trust them? That is number 2. Number 3 is the team alone. Can they take on the property or not? Or do they have the potential to take on the property or not? Number 4 is who's going to close in on the property from the time you get the LOI accepted to close. Number 5, which is extremely critical, is how we are going to manage the property, because everyone wants great returns on their investment. It is not just me. So that is also extremely crucial, because how you maintain that asset after you buy.
Those are great criteria. And so then, why don't we talk about capital raising? This is one of the things that you have focused on. Take us through your progression as a capital raiser, and what are some of the skills that you had to learn to become better in this field?
Well, that's a great question, George. Thanks for asking that. So I've never done capital raise, to be honest, but until someone trusted me and then gave me that opportunity, they told me one thing: listen, you have a tendency to network. You like networking. So the worst is going to happen. You're going to lose. And when you lose, you learn. You've done a lot of things, which is going to only make you a little stronger. Just take it. So I need to thank them for giving me this opportunity. So the capital raising is basically, I realized after raising capital for 4 different syndication, it is a process. Or the process is, the first is you need to connect with people. When I connect with people, not everybody wants to talk to you, not everybody likes you, but you need to find a common grounds. What is it they like? But with me, I have a mixed experience in terms when it comes to connecting. I look for the commonality. Number one, everybody likes dogs. I mean, not everybody. Everybody likes pets. So I ask them, do they like dogs? Do they like cats? Or what do they like? That is number one area of connecting. And next thing, if they talk about dogs, I love dogs, so I can talk about that. I talk about dogs. The number two, I ask them, are they married or not married, or do they have a partner or don't have a partner? That is a little personal, so I definitely ask them in a different way. And number three, do they have any kids or not? If they have children, that is another common thing. I have a daughter who's 12 years old. And number four, what sports do they like to play? Or do they play or do they watch? And I can talk anything about sports all day long with them. Even if I don't know a sport, it's all the better, because they would love to talk about what they know. So I listen to them. So there are so many things in common which you can connect with them. Most of us don't take it to the next step, because we ask them, do you invest in real estate? If they say no, and that's a dead end, people stop. No, that is a great question to continue the relationship, not stop. So that is number one, is to connect with them in real life, not trying to fake it. You be real. Not knowing everything is okay, nothing wrong with that. So number one is to connect. Number two is to educate them on what I'm doing. Not everybody would know everything about real estate, because I started that way, and I would like to pay it forward, and I like to help as many people as possible. So when I educate them, I need to educate them without any expectations. But every time you educate them, I make it a point to tell them what I'm doing. So that way, and I also ask them, hey, if you tell me when you're confident about what I'm educating you. If they say I'm confident, then I ask them one straight question. If everything looks good and it meets your investment criteria, would you invest in any deals? All they need to say is yes or no. And then if they say yes, I ask them, how much would you think you will be able to invest? They would say 50K or 100K, probably 6 months or 1 year from now, that's fine. And I just leave it there. So, and then after I do that, not everybody are inspired to take action. So I need to stay in touch with them, make sure they take action. So connect with them, educate, and inspire them to take action. So this is a big loop. This keeps going in circles. So you do this all over again. And if they don't invest, go back to them. If they invest, ask them for referrals. So just make sure I'm doing this all the time and all the time. So all these things comes down to a couple of things which I need to do it right all the time. I need to be a great communicator. And when it comes to being excellent in communication, I need to be an assertive communicator. I should not be an aggressive communicator, or I should not be a passive communicator. So the communication skills play a very crucial role. And I need to be confident about what I'm educating them. If I want to be confident, I need to know what is going on. So this is what I would do. So connect with them, educate them, and inspire them, and be a great communicator. Keep everything simple. Keep it simple. Do not complicate things. That is one thing I've realized. If they don't want to talk to you, let them not talk to me. Get back to them after a month. It'll be okay, because everybody has challenges on any given day.
So those are some great suggestions. If you want to raise capital, you're going to have to love to network, be genuine with people. You have to build up some pretty substantive relationships to do this properly, to educate them. You bring people along the journey, you show them your sample deal, and then you ask for a commitment, a soft commitment. So those are a pretty great, I would say, outline of how you can approach capital raising. But what about the actual presentation of the deal? So you've got the deal. A lot of people just focus on the deal. Maybe you can tell us why that's a mistake.
Well, the key is not everybody are interested in the deal, because you need to assess yourself. I mean, that is why I tell people, I don't want to put people blindly in my mailing list, because a lot of people do that, and I think that is a big mistake. It's like sending out a spam email, because just because I meet with you and talk to you, and you send me the next deal, whereas my interest is in let's say storage units, I may not even be interested in multifamily apartment complexes. So which means you have not qualified me properly. Okay, you not asked me what my interest is in, whether it's a multifamily apartment complexes, or storage units, or mobile home parks. Okay, and let's say even if I tell you a multifamily apartment complexes, what type of investor am I? Am I a seasoned investor, or am I a newbie, or I'm just wanted to be a passive investor? What level? How much do I know? What is my competency? So what really happens is people blindly send out emails without knowing what the type of investor they're sending it to. That is number one. Number two is, when I'm sending it out to all my investors, I know most of my investors well. I know at what point, what are they looking in for in most of the deals. So I tailor my emails, I tailor my presentations accordingly to them. And of course, when we get onto these deals, we make one common presentation to all the investors. That is the first level of presentation. And then for all my investors, I have 4 to 5 different groups of investors, and I tailor my presentations accordingly to them. Because let me back up a little bit, and I tell you, let's say I love fitness. So if I have 30 investors whom I met at a fitness club, so I know what they're looking in for when they want to invest. They want to buy more time so they can go run, go do an Ironman, or go cycling, or go for a swim, or go to the gym, go do a workout. So their criteria is totally different, because they want straight away ask me, how much can I get? Can I get the money what I spend on my fitness center? I spend $500 a month for fitness. If I invest $50,000, can I get $500? That is their thing. So I can't take that presentation and give it to somebody, give it to a doctor's. That's a totally different. So the bottom line comes down to, the more you tailor your presentations to your audience, the better the chances are of you getting money.
So it sounds like you are actually catering to a variety of avatars.
Yes, yeah. When I in my contact database, I specifically create tags, and I put them accordingly, because it becomes easy for me. It's like if you go to a doctor for a headache, the doctor, without listening to you, what your problems, and gives you a headache gives you medicine for a stomach ache, whereas your headache is still there. And what is your confidence in going back to the same doctor?
Right, none. So that listening is very important.
Listening is very important, and qualifying your investor is equally important, because I would say that makes the deal a lot better, because at any given point in time, everybody wants to invest money. It's like you go to a store to buy things, but you don't like being sold. you're going to buy from them no matter what, because you already decided to walk into the store. But if a salesman comes there and asks you, Mr. George, you're right here. Can you buy this? Can you buy this? If he keeps bugging you, you're going to walk away from there. At the same time, the salesman has to realize you're a potential customer. He has to treat you right. If he treats you right, you're going to buy what you want, and you're going to buy a lot more from him.
Great. And so you have a lot of ways of establishing those connections. So I see that you've got a lot going on in your private life. Toastmaster, you mentioned fitness, and you're also interested in travel and giving back. I see that you're part of the Lions Club. Any other, are you doing any other sort of volunteer work?
Well, Lions Club, because between Toastmasters, Lions Club, traveling, family, this itself takes up a lot of my time. But every now and then I volunteer at my daughter's school. That's a parents volunteers at the school once in a while. But other than that, if there's any community events, I participate. And like most of the sporting events, they need volunteers every now and then to put the races together, and I volunteer there. But Lions Club is a big part of me. And Chamber of Commerce, I take part in Chamber of Commerce events.
That's excellent. Great. Great to talk to people who are giving back. I think that's very inspiring. One of the main reasons that people do become and remain entrepreneurs, to have that ability, to have the time, to have the cash flow, to be able to do those sorts of things. So then I think we'll start to wind up with, maybe you can tell us about your 5-year goal. Where do you see yourself in 5 years?
Well, I have my 5-year goal is basically to get to my financial independence goal, financial freedom, passive income goal. That is number one. And number two, in terms of business, is I want to have more than $300 million assets under management. That is the next thing. And in 5 years from now, I want to be traveling more, and I want to automate my business completely. So I should be able to work from anywhere. And I want to have at least a bare minimum of 12 streams of income. And I should be able to do from anywhere. And one of my other things, since I've been heavily involved with Toastmasters, so which is Toastmasters has given me a lot of education in terms of how to be an effective leader, how to communicate effectively, and what does it take to be a leader. There's so many things. So these are the things which motivates me to give back to the community where I live. So in 5 years from now, I want to be traveling, not just traveling. I want to travel to volunteer to places. So that way it takes care of two things: my passion for traveling and passion for giving back to my communities. I want to give back more to the communities, because once my freedom goal is met, financial freedom goal is met, but anything above that is of no use to me. So I need to find ways to give back to my community. And also I might set up a nonprofit organization also.
Oh, that's amazing. So tell us what this might focus on. Any ideas yet?
Right now, it'll be primarily mainly for about the nonprofit will involve two crucial parts. So one is education, because a lot of problems can be taken care of if people are well educated or people know what they're doing. That is, a financial literacy is key. So education is number one. Number two is medical. So whatever I'm doing, whatever nonprofit is going to involve financial education and medical facilities. Because my wife is a doctor, and so that way both of us can travel, and I can take care of the education part, and she can step up on the medical part.
Nice partnership there. Vish, I want to thank you for a very interesting and informative interview. Look forward to following your career. And following that progression over the next 5 years, investors, we'll see you on the flip side. Thank you.
Oh, thank you, George. Thanks for having me on your podcast, and look forward to working with you in future.
Absolutely.